Hello, everyone. Today is Wednesday, March 8th, 2024, and I'm Brian Tokauke, Portfolio Manager here at the Rice Partnership, and I'm filling in for Ashley Wilkin today. With us today is Orest Saikevych, Chief Investment Officer of the Rice Partnership, and he's here to talk to us today about how the presidential election affects the financial markets. Hello, Orest. How's it going?
Good, Brian. Hello, everyone.
Hi. First question for you, Orest, is historically, how has the presidential election affected the financial markets, and how do you think this will affect this year's 2024 stock market or financial markets?
Okay, as far as the financial markets, in particular stocks, usually stocks work their way higher in an election year. It's not ironclad, but usually the trend is positive. Although during the year things can be quite choppy, with a lot of the gains late in the year after there's some certainty as far as who's going to win, especially after the election, usually get a nice year-end rally. Doesn't always happen, but uh, 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 most of the time since World War II, that's been very often the case. And interestingly enough, since the end of World War II, there haven't really been any four-year periods, in other words, presidential terms that were negative throughout. So that's a positive indication. As far as this year is concerned, we think the pattern should be similar. There are a few nuances, however. One of them is some of the trials that are occurring involving uh, uh, former President Trump and also Hunter Biden, who's the son of President Biden. The headline risk there, it may contribute to some volatility. So, that might come into play. We don't think that that's going to overall make very much of a difference as far as the final outcome is concerned, but certainly there might be some choppiness. Also, the geopolitical tensions that we're having, it's a little higher this year than most year. That could come into play, although usually geopolitical events don't last too long as far as their effect on the markets.
Cool. Thank you. And just in general, do you feel that the financial markets prefer one party or a candidate over the other?
Okay. The experience has been more often the Democrat candidate does better than the Republican candidate, although that's, not set in stone as well. Very often the Republican candidate does, if the Republican gets in, the market does well also. So there's a little bit of a bias towards the Democrats, but it's not really super significant. The other thing is too, there is a little bit of a effect on as far as the congressional races, meaning the House of Representatives and also the Senate. Very often, if you get a split government, or the market would prefer that you have unified government, that might influence things. And this year, you could see possible changes because both the House and the Senate have fairly close representations as far as Republicans and Democrats. That Republicans have a razor thin majority in the House, and the Democrats just about the same in the Senate.
Well, that's about all the time we have today. So, Orest, thank you very much for joining and providing your comments about the presidential election and how it affects the financial markets. Really appreciate it. And for those of you tuning or joining or viewing, thank you for tuning in, and goodbye.
Take care, everyone. Thanks, Brian.
You.